Hey guys, so in this video we will be going through the importance of time frame confluence and also how we can use it so that we don't get caught on the wrong side of trades. We will also go into how we decide between a swing trade or a pivot entry through time frame confluence. So starting with the pound Aussie, last week we had our eye on this pair as price was making lower highs and lower lows on the weekly. We also had 2 weeks in a row where price rejected this resistance and the 50 EMA. Now, the weekly time frame is evidently delayed in nature since each candle represents a week. Now, the reason why we need time frame confluence is because you never know when a big picture trend change will happen. Hence why you need to know what is occurring on the smaller time frames to support the higher time frames. So, jump into the daily. Remember that on the weekly, we had a bearish bias, but here in the daily, we were making higher highs and higher lows, which clearly shows an uptrend. So even though the big picture on the weekly was bearish, the daily is showing bullish momentum. And this is why the only way for us to look for a swing trade would have been a break of this trend line to show bearish momentum entering the market and for price to make a lower low. Or else we are trading against the dominant daily bull trend. Because we were going against the daily trend, we only wanted to take a quick pivot entry short instead of the swing. So jumping to the Euro CAD. Here on the Euro CAD, on the weekly, we have a doji rejecting resistance. But that does not give us a complete bearish bias, as this can just be a bounce and not a reversal. Going back to our other lesson about the concept of where price is coming from, if you look here, we had a long wick candle rejecting support, followed by a bullish engulfing candle, which shows heavy buying presence as a lot of buyers stepped in at this level. Knowing this, just a doji isn't enough. So if you were to take a trade short, we would need more confirmation through the daily. So let's jump to that. Here on the daily, most traders might have just seen this long wick candle rejecting resistance and the 50 EMA and jumped into a trade short. But for us, we need more confirmation because we know that there is heavy bullish presence on the weekly. In order to take a trade short, we would need a breakdown from this level to show that sellers are actually stepping in. And then after this occurred, we would look for a pivot entry short, not a swing, because again, the weekly is still bullish. So let's jump to the euro dollar. Here in the euro dollar, we were close to the end of the month and noticed that this candle would most likely finish as a long wick candle. So we know where the momentum was at that particular moment, but we need confirmation on the weekly. Here on the weekly, we had a bullish breakout and we again know where the momentum was for the following week. So we needed to confirm this on the daily. Here on the daily, we had a break of trend line and of resistance. So again, another bullish bias. We then went to the 1 hour time frame to look for entries. Now, on the 1 hour time frame, remember that we have monthly, weekly, and daily bullish momentum. So here on the 1 hour time frame, we had a wedge break. So the momentum was again bullish on the 1 hour time frame. So knowing that we have time frame confluence, this is when we looked for the entry. Now, this is what we call an imperfect pivot entry. And we take imperfect pivot entries when we have so much confluence and don't want to miss the trade, so we take a lenient entry. Because as you can see, this didn't touch the 50 EMA, but we had multiple candles rejecting the pivot. Now, to confirm that this pullback is over, we jump to the 5-minute time frame to look for a breakout. Here in the 5-minute time frame, we have a break of trend line and price starts breaking above the 50 EMA and making higher highs and higher lows, showing that the selling pullback is losing steam, and this is how we entered. So let's jump to the dollar CAD. Here's the dollar CAD. You can clearly see that the long-term trend is up. We have a run, a pullback, a run, a pullback, a run, and a pullback, followed by this long wick candle rejecting support and the 50 EMA, which shows clearly that the big picture is bullish. But again, you never know when this trend can change and start a big picture downtrend. This is why to confirm that the trend will continue, you need time frame confluence. Because again, even though we are bullish on the weekly, jumping to the daily, price is in a clear downtrend, making lower highs and lower lows. And only if we get a clear breakout from this wedge and not a false breakout, we will look for trade entries long. So I hope this helped you further your understanding of time frame confluence. And the most important takeaway from this lesson is that you never know when the big picture trend change will begin. So that is why you have to make sure the daily is confirming your larger analysis. So thanks for watching, and I'll see you in the next episode.